I made a video today about how the rates are high, but the prices are getting even higher and the inventory is plummeting. Let's talk about it. High rates, low supply, home prices skyrocket to unimaginable peaks as US homeowners stop selling out of fear of higher mortgage rates. First off, there's a lot of people who believed the entire time that the house prices will continue to go up and dramatically. The online news articles, social media algorithms love doom and gloom. If they can give you a negative emotional response to piss you off, they're going to push that in front of your face. The current housing prices are not unimaginable. In fact, US housing compared to most other world markets is really low as a percentage or a ratio compared to the average income. Talk to someone from China or Europe or something, and their housing price is $500,000 or $400,000. It's more than 10x their income, where you can talk to someone in most major US metros where their household income's like 120K and they're crying and saying it's bloody murder that the house is $600,000. That's like 5x their income. It's really not too bad. Next. All right, making that nice and big for us. Here we go. The housing market has grown exponentially since the pandemic, with owner-occupied housing wealth rising $9 trillion more from the first quarter of 2020 to 2022, according to the Federal Reserve. There's a lot to unpack with that. Ask me what I think about the Federal Reserve down in the comments. They're our best friend. Love them and we trust them. Our friends at the Federal Reserve, they know what's best for us. So, simply because of Federal Reserve policy, everyone who owned assets over the last 2 years, the value has gone up tremendously. But at the same time, because of inflation, the value of the currency has gone down tremendously. So it's almost a break even. The only people who got really screwed are people who didn't own homes, gold, Bitcoin, stocks, bonds, things like that. Sorry. The rising demand resulting from ultra low interest rates and limited supply played a crucial role in bolstering the housing market. We will have unintended consequences from the money printing for 20 to 30 years. Anyone who thinks this is going to be a quick fix, you have another thing coming. Despite the Fed's contradictory, hawkish stance resulting in sky-high mortgage rates, housing demand has continued to grow. Yes, of course. Jerome Powell and the Fed think that they can copy Paul Volcker from the past in the 80s, I believe, where you just make interest rates 20% and somehow it gets down to 2% inflation, which is supposedly a good thing. Again, ask me what I think about the Federal Reserve and out in the comments below. Yes, people still want to buy houses, and a lot of people want to move. But for a lot of people who want to move, it doesn't really make sense to buy another house. And so for the next 5 to 10 or 20 years, we may have people who they just buy a new house and do not sell the old house. So the inventory gets exponentially lower over time, and they just rent out that house with the fixed rate debt that they have. That's what I'm doing. Average home prices reached a new all-time high in May, increasing by almost 1% month over month nationally, as reported by the Black Knight Home Price Index. The price gains have been ongoing since January, with May's prices a smidge higher than the previous year. As of July 6th, the average 30-year fixed rate mortgage reached 7.22%, the highest rate recorded since early November. Things to unpack there. National data is basically worthless for your local market. You'll want to seek out an expert local realtor to see what the trends are in your local market, your local neighborhoods. Nationwide, regardless of what statistics and crashing, end of the world doom and gloom articles you may find, there are going to be neighborhoods, there are going to be zip codes where the values are going up. People want to live in the hot areas. People want to live where the schools are good. People want to live where the crime is low. People want to live where the taxes are low. That's just simply the way it goes. So you're going to have places, regardless of the area, whether it's Dallas, Phoenix, LA, Miami, New York, there are neighborhoods or sub-markets where it's booming and it's red hot. And then you're going to have areas where things are cooling off or not looking very good. And, oh yes, the average 7.22% interest rate. I'll give myself a little plug here because I do work hard on this content for you. Please make sure to subscribe, follow, like, and comment. As a mortgage broker, I can shop your interest rate. If you're in Texas looking to buy or refinance, I can probably save you thousands of dollars over a retail lender. such as any big name, big box website or big bank that you can think of. It is in your best interest to talk with myself and my team. We can get you a seriously good deal. And we have great service. 7% mortgage rates, the new normal. While the Fed's decision to pause interest rate hikes in June came as a relief to the markets and home buyers, the sentiment quickly changed as Chair Jerome Powell indicated that the pause was temporary. Nearly all officials expected that it would be appropriate to raise interest rates somewhat further by the end of the year, Powell stated in a congressional committee hearing on June 21. Home prices started declining last summer when the average interest rate on a 30-year fixed-rate mortgage more than doubled in just 6 months. The market began to recover in January because of renewed buyer demand, although it faced the challenge of a limited housing supply. Over time, buyers seem to have become accustomed to higher interest rates. So this is something that's really fascinating. Going through the pandemic, you had extreme competition. You had it set up so if you were not a serious home buyer, you were not getting a house. You had to compete with 10 or 20 other people to get a house. So you had to work with a really good agent and you had to work with a really good lender. Otherwise, you had a high risk of losing a lot of money by not closing on time. Simply because now a ton of the market, 80% or better, is under 5 and even 4% interest rates on 30-year fixed rate debt, not adjustable rate mortgages. Because of those interest rates being so low and so many people being grandfathered in, there will continue to be massive housing inventory shortages for the foreseeable future. There's really no way the government can force these people to sell their homes to you. For the more affordable and cheap homes, you're going to have a lot of competition. You need to work with someone who's going to help educate you on what your options are, someone you can trust, someone who's very knowledgeable and informed and can structure your mortgage in a way that's going to be most effective for you, and someone who's going to work with your realtor and the listing agent to make sure that your offer gets accepted and put in all the extra work they possibly can so when you find the right house, you actually get it. For the meantime, if you are under the median housing price in your market, expect competition, put your game face on, go in prepared. You don't need to make an offer after 1 minute, but you still need to put in serious offers. But on the flip side, there may be people who are forced sellers right now. So if the home has been on the market for more than 30, 40 days, you might want to start making rude offers and just see what you get. People might be getting divorced. People might be selling their home because they need the equity to purchase a home that's a new construction, that's almost closing, and they need to get that money out so they can buy the next home. There's so many different reasons that people have to sell. And over the next 6 to 12 months, we're going to find out who the forced sellers are and who the tire kickers are who just want to get a high price. Because what happens with a lot of people is they say, okay, great, I can get all this money for my house. Life's going to be great. What are my options when I sell this home and I pocket my $200,000? Actually, I can't really buy that much more than I already had. According to Andy Walden, the vice president of enterprise research at Black Knight, there is no doubt that the housing market has reignited in terms of home prices. Yes, it has, as he expects the annual home price growth rate to increase significantly in the coming months. Something you will never find in these articles is talk about inflation or the Federal Reserve. I'll talk about it again. I'll talk about it until the day I die. Inflation, please learn about what it is, look it up. Prices going up doesn't mean the value of it actually is going up because the value of the dollar is constantly going down. That's why a 30-year fixed rate mortgage is a cheat code to wealth, because if you hold that mortgage the whole time, the lender will lose their butt. They expect you to only keep the loan for 3 to 7 years. After that point, they can get their money back and lend out at the new, more adjusted interest rate. By May, more than half of the 50 largest housing markets in the country, primarily in the Midwest and Northeast, had either returned to their previous highs in terms of housing prices or reached new record peaks. Although home prices are still weaker in the West and certain pandemic boom towns where remote workers flocked during the earlier days of the pandemic, they are starting to stabilize. But only 8 of the top 50 markets are more than 5% below their peak levels. Basically, it's a blip. 5% housing price change is nothing. Earlier this year, I shared that I believed 6% mortgage rates were accepted as the new normal. I think now we are in an environment where 7% mortgage rates are now the new normal and people are accepting it. Compass Real Estate CEO Robert Refkin said. I actually agree with that. There's something called a normalcy bias. It's really important to understand in economics, in your personal life, in your buying decisions, in your spending patterns and spending habits. Recency bias says something that happened more recently feels like it's totally normal, even if it might not be normal. For example, during the pandemic, everyone thought, oh, 2-3% interest rates, this is going to last forever. Well, historically, that was insane. Giving anybody a 30-year fixed rate mortgage for 2 or 3% is literally bound to lose you money, a tremendous amount of money over the long period. It's insane that was even allowed to happen. And again, I will refer to our friends who love us and know what's best for us at the Federal Reserve. They're holding a huge percentage of mortgage-backed securities at those low interest rates. And the government will probably just quietly shift them off the bank's balance sheets over to the Federal Reserve over the next 5-10 years, because the banks will lose a ton of money and have major problems because of this. See Silicon Valley banks collapse in the last few months. Yes, so recency bias. I'm sorry, I do go on rants and tangents throughout here. Recency bias, the longer the rates stay higher, the more people are used to it. So the people who went out shopping, and when they started shopping, the rates were 3%, and then rates got to 5%, and they're like, this is terrible. I'm never going to do this again. Get out of here with these insane interest rates. They gave up and they're renting. They lost $100,000 appreciation on their home they could have bought. Too bad, so sad, I'm sorry. And now everyone else who may have been renting before and now a life event changed, they do want to purchase a home. They are used to seeing 6s and 7s in the news, on the internet, and it's normal for them. So they're just like, well, this is just the normal cost of doing business. That's normalcy or recency bias. Dwindling supply. Last year, a significant rise in mortgage interest rates briefly cooled the overheated housing market. Indeed. Q4 of 2022 was terrible. It was really terrible in mortgage. I think a huge percentage of people quit or got laid off. But the cooling effect did not last long, and despite the rates remaining relatively high, home prices are again rising as housing starts remain low. Housing starts are permits for new construction. The pace of price gains is accelerating each month. The housing supply is dwindling again, with new listings down approximately 25% from the previous year. Many homeowners with sub 4% mortgage rates are hesitant to sell their properties, as it would mean potentially securing a new home with much higher interest rates. Makes sense. Total housing inventory is now about half of what it was just before the pandemic-induced housing boom. It's crazy, it's so low. Sales of pre-owned homes have declined significantly year over year because of supply constraints. So if you're of the mind, like myself, where this will continue to be a problem for 5, 10, 20 years because we have so much fixed rate, low interest debt right now, it means that if you buy the cheapest homes now, 5, 10 years from now, they're going to be much higher because there's still going to be no inventory. And the places where they are building the new inventory are 20 miles, 30, 40 miles away from the center of town. Not everyone is going to want to drive 6 hours a day to and from work. It's just not going to happen. According to the National Association of Realtors, the median price of a pre-owned home in May was $396,000. Bidding wars have also returned, impacting affordability. Yes, they have. Turnkey homes under $300K are going quick. As of June 22, with 30-year rates at 6.67, and refer to my comment earlier about interest rates, the monthly payment on a medium-priced home with 20% down was $22.58 a month, the highest on record, slightly surpassing the $22.34 required back in October. I think that's enough for this article. You get the point. Inventory is incredibly low. I personally think inventory will stay low for years and years and years. That means that in the places people actually want to live, mature neighborhoods, good school districts, there's going to be less and less homes for sale, more and more demand for those same exact houses. Are prices really going to drop significantly even if economic times become rough? I don't know. I don't think so. What do you think? Tell me down in the comments below. Subscribe, like the video. If you think I'm nuts, go ahead and dislike the video. If you liked what I had to say, check out my channel and all my other content. I review news and I have a ton of educational content. As a mortgage professional, I see so much misinformation online. I'm building a library over time where you can see reliable, accurate, truthful information for you and your home buying journey. See you on the next video. Have a great day.